Welcome to another S&P 500 analysis. Today is February 24th, 2021. This is a midweek edition. So are you ready to call a top yet? In this video, I'm going to tell you where I'm at and what I'm hearing from the market. So stay tuned. Now, if you've been following me and been watching my video or following me on Twitter, you probably already know that today the Dow Jones Industrial made a new all-time closing high. Should not be a surprise to you because we see messages, continuous message from the Dow theory to tell us to keep a lookout for the Dow Jones Industrial to make a new all-time high. And indeed, we saw another new all-time closing high today from the Dow Jones Industrial. Now, is this a top? Well, let's go and take a look at the indexes. But before we do, let's go and take a look at the pulse of the market. What I mean by the pulse of the market, these market internals and also the market sentiment, they are basically similar to the human vitals, right? We measure our body temperatures, our heartbeat, or blood pressure to get a state of our health at a given time. And the market internal is basically, or similarly, or analogies to our human vital, because they measure the pulse, the temperature, and the blood pressure of the market. So we're going to go through those. And if you are new here, and if you have any question or confusion about some of these internals that I discussed, just post your question in the comment below, and I will try to answer them as soon as possible. And also, in addition to that, we're going to take a look at the market sentiment. Right? The market sentiment is basically a measure of the market participant sentiment or the bias toward the market. Are they bullish or they bearish? And here we are looking at the sentiment chart, and we're basically looking at the VIX. The VIX is basically what we call a fear index. So when there are more fear in the marketplace, that's when we see this implied volatility. This indicator will go up. And here what I do is I mark off two level, and I call this a caution zone between the 20 and the 30. So within that zone, if the value of the VIX is all within that zone, we could say that what I categorize as the market participant is not really complacent or fearful, but they are cautious. Right? Once we get up above that 30 and get close to the 40, then the market participant is essentially getting very panicky. But when it gets down to 10 or 12, they are very complacent. And then also the other thing is we look at the put-call ratio. It's the ratio between the number of put and the number of call that is being purchased or sold. The ratio between these two will determine, how much of risk on and risk off the market participant is willing to take. So what I have here is basically I have a line marked off at a level of 0.75. The ratio of 0.75, that still implies that there are more calls being purchased than put. So when we see this 0.75, or if it go above the 0.75, then we enter into a little bit of a risk-off zone. That means people is not being as much or as optimistic or bullish as they were if it were down at this 0.5, 0.4, like right now it's sitting at 0.46. So the market participant is still very bullish and they are piling on risk. If it get up to 0.75, and especially when it gets up to 1 and above 1, then we start seeing more hedges going on, buying put, to hedge their portfolio. And also you have more trader or speculator betting on the market going down. So they are buying the put to bet on the downside. So right now we are seeing the VIX is sitting at 21.34 today, which is, cautious, but not fearful. And the put-call ratio is down 0.46. Risk is still on. It's not even anywhere close to 0.75. So based on these two indicators, the market participant sentiment is still risk on. And it shows, right? The S&P 500 surge up. It did not make a new closing high or intraday high, but it's getting close to that, right? Okay, we saw yesterday sell off and it got a nice bounce off the low. And then today we got a continuation move to the upside. Right? Although initially we got a little bit open on the downside, but it recovered and then we just push and it closed near the high today. Now we're going to take a look at the S&P 500 index a little bit more closer later on. Before we do that, let's go and finish up looking at the market internal and see what is the pulse of the market and what they are telling us. Now here is the up-down volume ratio. That is the ratio between the up volume and the down volume. So when we have a positive ratio, that means there are more up volume than down volume, and vice versa. Okay, so right now, today is 3.3. That means there were 3.3 times more up volume than down volume in the New York Stock Exchange. And here is the daily advance decline. Okay, that is the difference between the net difference between the number of issue advancing in price and the number of issue declining in price. So today we got 1,192 more advancing issue than declining issue. So that's a good positive strong strength. Although with a market going up, today 44 point over 1.1%, we would like to see this number much larger than that, somewhere around, at least above the 1,500, close to 2,000 would be nice. But although right now it's sitting at, 1192, it is still respectable. And here we're seeing the number of new 52-week high over the number of new 52-week low in the New York Stock Exchange. Today, the New York Stock Exchange closed with 374 more new 52-week highs than new 52-week low. So that is also a good positive number. Then here is the cumulative advanced decline line. It's basically we're taking each individual day or trading session daily advanced decline and then run a cumulative sum to that. If it is positive, then we add to the previous sum. If it's negative, then we subtract it from the previous sum, and then we run and then we plot that value. Now, be aware that all these indicators that I'm showing you got nothing to do with moving averages or summing up so many days and then divided by so many days. Once you start doing that, it becomes a lagging indicators. These are each individual trading session numbers. It is representing what it is today. Because, you don't go and take your blood pressure for 10 days and then you average out and say, oh, my blood pressure on average is still within that normal range, even though today you are having a heart attack and your blood pressure is way high, right? So these moving averages doesn't give you a clear picture exactly what your health is at that particular point in time. That's why you don't run moving average, right? When you want to measure the state of the health of anything at this particular time, right? You want to take that reading at that instance, okay? And these market internal represent that instant, that trading session. We don't take the last 10 trading sessions, add them up, and then divide by 10 and then get an average. That is 10-day lagging, or at least 9-day lagging behind what it is right now, because it distorts the picture. So now, this is basically this is we're just running a cumulative sum of the net difference between each trading session. So right now we see that the actual value doesn't matter. It's not that critical because we can start with any numbers and then you start adding the cumulative sum to it. Then, basically we're looking for divergence and the high and the lows. So right now we see that the advanced decline line is moving up while the S&P 500 close. This is the plot of the S&P 500 closing price and also moving up. And it did not make a new closing high, neither did the advanced decline. But what's important is that they both are going up. Now, if we have one going up and the other one going down, then we have divergence. And that is what we need to pay notice to, okay? So right now they're in sync because they are moving in the same direction. And here's the Nasdaq market. We're looking at the up-down volume of the Nasdaq market here. The Nasdaq market have 3.18 up-down volume ratio. So there were 3.18 times more up volume than down volume. And the advanced decline is 1,805 more advancing issue than declining issue. So that is also very respectable. Okay. Now look at the Nasdaq. The Nasdaq did close up, but it is far away from the all-time high. Now, if you have been following me, you probably have heard I'm saying that next time we see a new, high from the S&P 500, we might not necessarily see a new high from the Nasdaq. The premises that I'm using to make that statement is basically I'm sensing the market is rotating away from the tech-heavy stock into the, what we associate to the reopening, which is more cyclical and the value-oriented stocks. So that's why I'm not surprised to see the Nasdaq is kind of lagging in terms of performance. But you never know. They could come back and rebound and join the crowd and push us up to a new high as well, along with the S&P 500 in the near term. That's possible. Not saying that it won't happen. It is that I would not be surprised that if it doesn't happen. Now, here's the new 52-week high over the new 52-week low in the Nasdaq market. The Nasdaq had 368 more new 52-week highs than 52-week low today. And here's the Nasdaq cumulative advanced decline. Again, the Nasdaq 100 have a closing higher. It moved up, not necessarily trending up, but it still is, you could say it's trending up because it's a higher low. And the advanced decline, the cumulative advanced decline also moved up, although it did not make a new high. It's moving up, so we are not seeing any divergence. So based on the sentiment indicators and also the market internals, we are not seeing any sign of warning to tell us that the market is at a top. Now, we're not saying that the market is not stretched. It's just that the market is not saying that it is deteriorating to a point that it's getting exhausted and doesn't have much strength to push it any higher. Because when the internals no longer possess that strength to push it higher, then any new high would be very suspicious. What I'm saying is that right now, there is nothing there to tell us that the market has topped. Now, let's go and take a look at the index itself. Okay, here we are looking at the S&P 500 daily chart. Remember from the last video, we are talking about the potential pullback that would come down and fill this gap, and the key level to watch was 38.71. If it breaks below the 38.71, we expect it to come down to test the trend line, break the trend line, then come down to fill this gap here at 37.84. As you can see, it came close to breaking this trend line yesterday. And it got a nice bounce when it got close to this trend line. And today we got a little follow through. It came down, filled this gap here, but it did not fill this gap. So this gap probably will get filled in the next round when it comes down. So right now you see today is a very strong day, this solid green candle. And the chances are, remember we were looking for this 380, 38.71 as the key level to watch if it come back up. We're basically looking for the 3900. You see today it took out that 3900 and move up above it. So right now we essentially is still looking at this high to get taken out. And there's another thing that told us to be on the lookout for the S&P 500 to make a new high. And I will remind you of that later on. But for now, we just look at this candlestick chart. So let's go and take a look at the other index. Today on Twitter, I tweeted out and talked about the New York Stock Exchange Composite Index, and a lot of people probably are not even familiar with this thing. They probably haven't even heard of it, right? Because you solemnly hear this on the nightly news. The nightly news just report the S&P 500, the Nasdaq, and the Dow Jones. I don't know where you would hear that New York Stock Exchange Composite Index being reported. This index is basically comprised of all the stock, over 3,000 stock that is traded in the New York Stock Exchange. It's unlike the S&P 500 only consists 500, and the Dow Jones 30 only consists 30. Right? So right now, this index made a new all-time high and closed at a new all-time high. And look at the strength of this candle here today. See how bullish this candle is? It broke this downtrend, this pullback, and it just shot up. So this is a very strong message here about the strength of the market. Here's the Nasdaq 100. It came down, filled this gap, and we're basically looking for a potential pullback down to, possibly get down to this gap and also to this pivot high here at 12,439. You see that it came back up and reclaimed this 13,280. So right now, we basically want to see would it be able to continue to come up and take out the 13,600, essentially filling out this gap here. Come back up and take this gap. Then we'll see would it be able to actually come up and take out this high. If it doesn't, like I said, I wouldn't be surprised. Now let's look at the Dow Jones Well, let's go look at the Russell first, and then we come back to the Dow Jones Transportation and the Dow Jones Industrial. Okay, you see the Russell 2000 also came down to this trend line on this channel, the upper channel trend line. And we're saying watch that for potential support. If it break that trend line, then we expect it to come down, and possibly work itself down to this 1935 area. So you see that it got a nice bounce when it came down close to this upper channel trend line. And then it booked this little bit of a pullback, downtrend today, solid candle, solid green candle. It's getting back up to the 2300. That's basically what we're looking at. So if we could get back above that 2300, we're basically looking at this potential new high or the all-time high back in play. Now let's go back and take a look at the Dow Jones Transportation. You see the Dow Jones Transportation. You see how it's making new high consecutively? That is strength, and it reclaimed this lower price channel trend line. So right now, there's nothing there to say that this is it until the price action tells us this is it. So, but what it does tell us here today is that the Dow Jones Industrial also made a new high. As long as the Dow Jones Industrial makes a new high along with the Dow Jones Transportation, based on the Dow theory, we call this a confirmed high. So now let's go and take a look at the Dow Jones Industrial. See the Dow Jones Industrial. Remember we had the Dow Jones Transportation start making new high on these days. Right here on Friday, the Dow Jones Industrial put in a new intraday high but did not close with a new closing high because the close is what matters. Intraday, this could be a lot of manipulation and games and trickeries, shenanigans, but it's the close that's what matters. Okay? And it did not close with a new closing high on Friday. Neither did it close with a new closing high on Monday and Tuesday. But today it did, along with the Dow Jones Transportation. Now, all these 3 days prior to today, the Dow Jones Transportation closed with a new all-time high. So when the Dow Jones Transportation closed with a new all-time high and the Dow Jones Industrial has not, then that's basically the Dow theory tells us to wait. Wait for the Dow Jones Industrial. Wait to see if it's going to make a new high. When we get a non-confirmed or unconfirmed high is when we see some reversal action will likely occur. But when that time comes, then I'll talk to you about it. For now, we're basically still looking for at least another new all-time high from the Dow Jones Industrial. Not necessarily from the Dow Jones Transportation, but from the Dow Jones Industrial. So that's basically the indexes. As you can see, that we have confirmed high from the Dow Jones Industrial and the Transportation. We have strong action from the Russell 2000 and getting close back to near its all-time high. And we also have strong action from the SP500. Although the Nasdaq, the Nasdaq 100 is a little bit lagging. And that is not a surprise to us because we've been talking about this rotation out of the tech into, the energy, the financial, and the industrial. And that's precisely what it is doing right now. That's why it's pushing up the Dow Jones Industrial. So now let's go and take a look at the chart that I want to show you and remind you why we are still expecting to see, the possibility of the S&P 500 making a new all-time high before this, this cycle or whatever you want to call it is over. Because right now there are no signs to tell us a top has been put in. Now some of you might have not seen these charts before. On the right hand side here is the volume profile. These are the volume profile. What it does is it plot the volume traded at a given price. So instead of the traditional volume that you see on the bottom there, that represents the volume traded for that particular time period. So there's a big difference because right now on these volume here is tell us, how favorable that price is, how many shares are traded at that particular level. The more shares that are traded at that particular price level, that means, the buyer and the seller consider that price to be more fair. Okay, that's why you see these peaks, and then you got these value here, or these what I call the low volume zone. That's where you see there's hardly any volume being traded at that price level. That means the buyer and the seller doesn't like to transact business there. They don't like that price. So you tend to see price move away from that level very quickly. And then on these high volume area, you see price stick around in that area for a while because there's a lot of trading going on. So you can see on today, it kind of pinches off at the top, right? Maybe low volume traded there. That means there's a sign that the all the ruling buyers that want to buy at that price, at that high price, that's already bought. So what we could expect is that if the seller want to sell, they have to go look for buyers. Well, just like any auction market, how do you find buyers? You lower the price until you find willing buyers. And likewise, at the bottom, for instance, right here, all the seller that want to sell is already sold. So if you have a buyer coming in and you want to buy it, so how do you, find seller to sell it to you if all the seller at this price level already sold and they don't want to, there's no more seller at this price or lower prices? Well, you have to raise your offering price to go find sellers, right? Okay, so that's the beauty about the volume profile. It kind of gives you that, that context. Okay, so now what we want to see is also, this is the market profile, and there's a couple of things that we want to highlight on the market profile is what we call these single print. Now, as you can see, that single print is when we only have one particular dot on the vertical axis here, on the vertical plot here. So these single print is basically, it's almost like these low volume zone. I mean, there's hardly much time being spent at those price level. In other words, traders doesn't like those price level, so they just move away from it real quickly. And also, when you see a lot of dot like this area here, a fatter profile, then that means there's a lot of time being spent at those prices, these price range here. Okay. And here's a point of control is that the most time that has been spent at that particular price level. Same thing here on the volume profile. This is the point of control that represent the price level where most of the, the highest volume was traded, in that session or in that time period. For this right here, we have one profile for each trading session. So this price level where there's the highest volume traded at that level. And this range here, what we call is the value area, which represents 70% of the traded volume for that time period, for this trading session. So this 70% it represents, one standard deviation, right? If we just plot any kind of a Gaussian distribution chart, that's basically what this is, right? Like a histogram, Gaussian distribution. So if we ideally we like to see a Gaussian distribution that you have a very flat, very fat middle and then tail off at both ends. Depending on the pattern of this profile, it kind of gives us some idea of what kind of trading activity went on for that day. Right? So that's another video, another subject for another day. But today we basically want to just focus on this thing here. Is this right here? This Globex all-time high at 39.59.25. Okay, that was printed on February 16, the overnight session. That level have to be tagged during the regular hour session. So that level is the key level that we need to watch. And that is the all-time high level for the S&P 500 future, the E meaning S&P 500. If the future is going to hit a new all-time high during the regular trading session, then the S&P 500 cash index will also going to be hit an all-time high. So that's the reason why we are still on the lookout for the possibility for the S&P 500 to make a new high. The Dow has already informed us that should keep an eye out for a possibility of the Dow Jones Industrial to make another new all-time high. So for now, we basically continue to monitor and look for S&P 500 for the possibility for it to make a new high and also the Dow Jones Industrial to make a new high. So if you like this video and find it informative and useful, and you are new to this channel, is not a subscriber to my channel, click on the subscribe and also be sure to click on that notification icon so you'll be informed of the next video that I will post on my YouTube channel. And be sure, every one of you, be sure to smash that thumbs up to help me promote and share this video on YouTube. Thank you for watching and stay safe.